Welcome traders to this new market review of last week's price action for Nasdaq, week number 3. So last week we had this economic calendar. On Monday we didn't have any high or medium impact news. On Tuesday we had 8:30 a.m. PPI release. On Wednesday we had 8:30 CPI release, At 10:30 a.m. we had a medium impact news driver as well. On Thursday we had 8:30 news, and same went for Friday. Okay, in last weekend's game plan for last week I mentioned that we were bearish on the market because I saw that in COT data, I saw that commercial speculators were net short. So I expected some downwards continuation for this week. Okay, we were looking at this sell side imbalance, buy side inefficiency on the 1 hour chart. And this one, which was in a premium as well. So I expected some sort of manipulation up, only to go down later in the week/month, taken that January is generally a bearish month for indices. Okay, so if we take a look at the weekly chart for Nasdaq, I thought that we would have some downwards momentum, downwards continuation, but instead Nasdaq said, nope, not this week, we're going up. Okay, on the daily chart, we saw that last week's Friday, which was NFP release, took out this previous week low into bullish order block, into this bullish inversion fair value gap. And I expected some manipulation up, only for Nasdaq to go down, but instead manipulated below Friday's low into this bullish breaker on the daily chart. Tuesday created a high low. CPI release on Wednesday caused this upwards price action. Thursday had some retracement, and Friday we created the high of the week. Okay, so if we take a look at the hourly chart, I drew these sell side imbalance, buy side inefficiencies on the hourly over here and over here. So what actually happened was the following. On Monday during London we had this downward move, creating the low of the week. New York AM session was accumulation, and during the PM session we went up. On Tuesday we had PPI release over here, traded all the way back down into this bullish order block, mean threshold, consolidated for the rest of the day. And on Wednesday, the 8-hour candle, which is CPI release because it was released at 8:30 a.m., we traded into this sell side imbalance, buy side inefficiency. We closed above it, the very next candle at 9 o'clock with 9:30 opening. Retraced all the way back down the CB low, and we continued up till here. On Thursday we traded up during London. During the AM session we traded back down into this CB on the hourly. You can see that the bodies stayed beautiful inside it, and there we had final displacement up 8 o'clock candle on Friday, which were the 8:30 a.m. building permit support, and we traded all the way back up into this SIBI on the hourly chart. And take a look at the bodies. Beautiful. Okay, so this price action is Monday, and I annotated the midnight opening range and the first displacement, the first most obvious fair value gap. And as you can see, after the midnight opening range was formed, we manipulated up into the -1 standard deviation level measured from this high to this low, displaced back into midnight opening range high, into the -0.5 standard deviation. Notice price action over here. We consolidated inside the midnight opening range. We took sell side over here, relative equal lows. Took buy side next. And displaced all the way down. Note at the time here, or look at the time here, which is 3 a.m. macro for London, which is the heart of the London kill zone. Traded all the way down, used the 2 standard deviation level from the midnight opening range, traded into it, traded all the way down into that bullish breaker closing price on the daily, which I mentioned before. Let me show you. Low, high, lower low, and displacement up, making this green candle a bullish breaker. That is the price I have highlighted. So looking back into Monday's price action, we returned to this discount array on the daily chart. We accumulated in here, and at 5 a.m. macro we went up. 7 a.m. we created a relative equal lows just after 7 a.m. Notice that. Went up, created some relative equal highs here. So we wait till 9:30 a.m. and opening bell, and we wait for one of those to be purged. And as you can see, we purged the sell side first into the bullish breaker closing price on the daily. We displaced up, returned back to the first presentation, and if we measure this, it's more than 100 handles within. Okay, this candle would be the fill. Okay, let's measure till the buy side liquidity pool. Okay, in 1, 2, 3, 4, 5, 6, 7, 8. Now let's say 15 minutes or so, we could book like 100 handles or even more. After the buy side was purged, displaced down, returned towards this sell side imbalance, buy side inefficiency, and we traded all the way back down. This could be a bread and butter setup as well. But as you can see, and as we could anticipate, the AM session was pretty difficult, taking into account that the day prior to Monday was Friday, NFP Friday. We managed to book, I think, 500 handles on the day. So after a large range day, we can expect small range day to unfold, which happened here. Note how price used the midnight opening range. I forgot to mention the orange shaded area is a discount opening range gap, which I'm gonna close for now because it makes my chart pretty messy. Over here we have new week opening gap for this week. And as you can see, AM session was pretty difficult one. This opportunity was beautiful. Yeah, plus 100 handles on a no news day, which is pretty amazing if you ask me. And if you look at this, how price treats the midnight opening range, it's actually beautiful if you ask me. Then in the final hour of trading, we had expansion away from the midnight opening range, trading all the way back up into the new week opening gap. So that's it for Monday's price action. Okay, for Tuesday, we opened above the new week opening gap, creating midnight opening range as always. We created relative equal lows, traded up, manipulated below these relative equal lows just 2 minutes after 2 a.m. macro. We traded above it, retraced into the midnight opening range, beautiful 100 handles up, trading all the way back down at 8:30 a.m. we had PPI release. We didn't manage to take out these relative equal highs, but instead created some relative equal highs over here, returned into the midnight opening range. At 9:30 a.m. we created this premium opening range, which was 100 handles, which is indicative for a beautiful low resistance liquidity run. Okay, we traded up, taking this high but leaving this high and this London high intact. This plays to the downside, closing in the opening range gap. We deep retracement up into the change in the state of delivery candle, trapping traders to buy, and went all the way down. The whole function of this move is just to engineer more buy side liquidity above these relative equal highs for CPI release the very next day. One thing that was in my mind during this week was, okay, let me close this opening range gap for now, was this new day opening gap in close proximity to this week's new week opening gap. ICT taught us that when this happens, it works like a black hole, so it sucks price right into it. And Tuesday's price action was a beautiful example of that. Hovered around it, over here, we had a beautiful silver bullet opportunity, which was in line with our bearish narrative. Trading into the new week opening gap, consequent encroachment, new day opening gap, consequent encroachment, into new day opening gap high, and we traded all the way down. During the lunch macro, we reversed, taking the profitable the stop losses from profitable positions, which were, obviously since the opening bell short because the market went all the way down. So between 10 o'clock and 11:30, which is over here, you want to look for the nearest buy side liquidity pool, which is this one. Price took it. We waited for the right time. Trading all the way back down into the lunch low. Pretty heavy price action if you ask me. For example, this high down to this low, 300 handles. Just lunch macro retracement, more than 200 handles, and then beautiful. Okay, let's measure it till this sell side liquidity pool. It's also more than 200 handles, which is pretty insane if you ask me. Okay, that was it for Tuesday. Let's take a look at Wednesday. Okay, so we're looking into Wednesday's price action. Again, midnight opening range. You can see the confluences. But we had some, let's call it time distortion prior to the 8:30 a.m. CPI release, which is, if you've been around long enough, then you're pretty familiar with this phenomenon. So 8:30 a.m. the hand uses it to create this manipulation all the way up. Manual intervention is what I meant instead of the manipulation. What you see over here, the blue area, is the sell side imbalance, buy side inefficiency on the hourly chart. Traded above it. Note that where this beautiful run started, it was inside this black hole. So confluence between new week opening gap and new day opening gap, starting to move all the way up into these new day opening gaps. At 9:30, manipulated. First we manipulate up, what you want to see for bullish continuation. Manipulation down into the sell side imbalance, buy side inefficiency on the hourly chart, making it a bullish inversion fair value gap, trading up. Retrace all the way back down into the opening range gap high. Look at the bodies, just beautiful. Inside the bullish inversion fair value gap on the hourly. But what disappointed me at the time was that the first presentation didn't really provide any opportunity, because as you can see, price didn't trade into the first fair value gap with the volume imbalance over here. So comparing to previous CPI releases, I think this one was pretty difficult to trade. Let's assume that you thought this was just some manipulation and you wanted to enter short, for example. Just a high resistance liquidity rundown. And then 12 a.m. macro, lunch macro, 12 a.m. Provided some long opportunities, but I really didn't really like it. So that's it for Wednesday's price action. If we look into the 2 p.m. macro at Thursday, this one in the center and leave the middle line for what it is, we can see over here we have the 2 p.m. macro. Over here we have a bullish order block with a volume imbalance on top of it. If you've been watching ICT for a while, you identify this as the Ingo entry model. We close above the volume imbalance, extend this. We trade back into it and we expand all the way up. If you can identify a Indigo entry model, you could capture a beautiful high reward, low risk entry mechanism. Entering on the top of the volume imbalance, below the down close candle we place the stop loss. You could have a 8.5 stop loss and the possible return up to the high over here. You could manage to get a 14.6 R trade. That's absolutely insane if you ask me. So that was what I wanted to look into. And over here, the 5 p.m. macro was beautiful as well. This high was created. We displace to the downside. Note this high of this candle, trading back into the new day opening gap low, into the midnight opening range low, both in close proximity to each other, trading all the way down into the hourly SIBI, which was a hourly bullish inversion fair value gap. Note how the bodies are respecting the first presentation of Wednesday. Note the confluence with over here the bullish inversion fair value gap consequent encroachment. Yeah, absolutely beautiful if you ask me. So on Wednesday we had CPI release, beautiful large range day, measured from low to high, low to the high of day, which is over here. We managed to make 543.75 points, which is actually insane if you ask me. So the very next day is expected to be a relatively small range day, which happened on Thursday. And what do you know about if Thursday is a small range day, then Friday may be a large range day, starting the move pre-session. So, okay, let's dive into Friday's price action on the 1 minute chart. Okay, again, midnight opening range is formed from this high at 0:30 a.m. down to this low at 0:10 a.m. Note the confluence with the standard deviation levels. Trading back into the bullish inversion fair value gap on the hourly. We trade all the way up. Note this sell side liquidity purge over here. Expanding up, retracing into the midnight opening range low. Trading all the way up. But what's important about this retracement is that it's inside the 3:30 a.m. macro, which is the heart of the London kill zone. After the London kill zone, we went into consolidation, engineering buy side and sell side liquidity. Over here, the relative equal highs, buy side liquidity above it. We trade into it, trade all the way back down into the sell side liquidity pool below this low, these lows, into the midnight opening range high again, expanding above the new day opening gap of Thursday, retracing into it. Yeah, note where this move starts. 3:07, so 7 a.m. macro. We expand all the way up, so price was in a hurry to go up into this new week opening gap. This new week opening gap and the hourly SIBI, which price Didn't trade in yet, but the algo hadn't forgot about it yet. So we traded into it. We had the market opening, the opening bell at 9:30, and after 9:30 the draw on liquidity was or at 9:30 the draw on liquidity was already met. So the rest of the AM session price just went into consolidation without any low resistance liquidity runs, which could be anticipated because Tuesday and Wednesday already posted were the main high impact news releases for the week. Okay, traders, this was the market review of week 3. I hope you enjoyed it. I hope you learned something, and yeah, have a nice weekend and have a nice trading week.